in general, when we do our modeling, what we find is that if you use too tight of a stop, okay, you will drop your win-loss ratio way down because you'll end up getting stopped in the noise more often than not. So with all our testing, no matter if it was a retracement trade, a counter-trend trade, reversion to the mean, a breakout trade, all these types of things, didn't matter how we modeled it, it always deteriorated the system and the results if we used too tight of an initial stop. And I see that happen to people all the time. They've got the right idea and they get jiggled out in the noise because they get nervous or anxious. What I would advise people to do is use a wider initial stop, and by that, what tests out best, just so you know, is 3 ATRs. That's 3 average true ranges. So if you're trading on a 5-minute S&P chart and the average range of a 5-minute bar is 1.5 points or 2 points, that means your initial stop theoretically should be 6 points away. Okay, that's the theoretical optimal solution. That may not be palatable to you, so you might want to actually go down to an even shorter time frame, perhaps then use a 3-point wide stop. Of course, with the market volatility that we had, we're starting to see that contract again. So, keep in mind that we were in an unusual, extreme, volatile environment. It's probably not going to persist that we have 50-point S&P days. So always keep in mind the volatility. The main point I want to emphasize is wider initial stop, you will have a higher success rate. Now, once that market starts to move in your favor, tighten that stop up, okay? We don't want the trade to then fail or reverse. The second thing that tested out great was a time stop. We put in our initial wide stop, but if the market doesn't show a profit and it doesn't show a loss, and we actually found that I think 7 bars was the threshold on a daily chart. If it hadn't come close to our profit objective, hadn't stopped us out on a daily chart, after 7 bars, it always tested out best that you would do better just to exit at that point, as opposed to letting the thing flounder and stop you out. A trade needs to start working within 7 bars. The stops, there's not always a relationship to where a trade is entered and where a trade is stopped out. Again, we found that fixed amounts or average true ranges worked best. They may not be near a relevant chart point. Most people will automatically gravitate towards putting their stops below a swing low, which is fine. That's common sense, and there's a certain logic to that you want your stop below support level. What we actually do is, if I'm trading on a 5-minute chart or 15-minute chart, I'll just put it in at the lower Keltner channel. So I have a consistent way of always putting in an initial stop without worrying about the, is it in the middle of the noise? Is it, below a previous low? Are they just going to tag it or whatever? That gives it a reasonable amount of chance to work. Once the trade does work, then I will pull it up, below support levels and so forth. Here's another interesting phenomenon with all of our testing in general. The lower the amount that you play for, the higher your win-loss ratio, right? Like, duh, if I'm going to play for 3 ticks, I'm going to get a win-loss ratio of 90%. If I'm going to play for 5 points, my win-loss ratio is going to drop down to maybe 60%. So there's always a trade-off between like how greedy you are and your success rate. It doesn't mean that there aren't certain patterns and setups where we do want to play for a much bigger win. If we do have a breakout from a chart formation where we've got potential for a trending environment, because now there's an extreme supply-demand imbalance, absolutely, we want to trail a stop and we want to play for those 6 ATRs. And our odds of success are probably going to be more like 40% because that seems to be the profile for a typical trend-following system. But you have to understand that everything in this business is a mathematical trade-off, more or less. Okay, so just keep that in mind. If you're a day trader, you're going to have a totally different style and a much higher win rate than the people that are playing the trend-following stuff.